Welcome to the Senior Spaces podcast. This is the show that's an offshoot of Senior Spaces. My name is Bryan Devore. I'm the host of Senior Spaces. I'm a seniors real estate specialist with Berkshire Hathaway Home Services, California Properties. This show is going to take a deeper dive into the three paths that people take when it comes to how seniors are going to live the next chapter of their life. Are they going to age in place in their current home? Are they going to maybe downsize and move into a smaller home? Or are they going to move into senior living? We're going to meet the people and explore the resources that help seniors and their families make that happen. I'm very excited that our first guest in this show is going to be my friend, Phil Giordano. Phil, you were one of our sponsors of Senior Spaces. How you doing today?
Good. How you doing, Brian? Excited to be here.
Yeah, my pleasure.
Yeah.
So we're going to talk about who you are and what you do in just a moment. But we're going to start off with a sort of a startling fact. I did some research before you came in. So here's the hook that's going to get people interested in what you have to say.
Sure.
For those of you out there who have life insurance policies, did you know that selling your life insurance policy can yield a cash payout of about 4 to 8 times higher than the policy's surrender value? Think about that for a moment. We're talking about hundreds of thousands of dollars, 4 to 8 times. And that can fund your home modifications if you're going to stay home or downsize, or you're living in senior living. Does that sound right?
Oh, yeah. That's dead on. I mean, 4 to 8 times is about the average, and sometimes it's even a lot more than that. A lot of people, the shame is a lot of people just still don't know about it. They don't know about life settlements, and they don't know about the opportunity to sell their life insurance policy. And so it's important. It's a lot of education. That's why I appreciate the opportunity to be here.
Yeah.
To be able to let people know that they could look at life insurance as an asset that can be sold. Like a car, like a home, it could be treated like an asset for seniors.
Yeah.
And it's just one more option on the table that can help them make ends meet. And, in my experience, you meet all kinds of people, and there's a variety of reasons. Sometimes it's just the premiums are too expensive. Sometimes, like you're saying, they need it to help with assisted living or help with a home modification or help pay off a mortgage or whatever. So yeah, there's a lot of options.
Yeah, that's great. So the name of the company is SFS Life Settlements.
Correct.
How did you get into this?
Yeah, I got into it years ago. I was in banking, and then a friend of mine started a company in the life settlements industry. So I worked with him for 2 years, and then I started SFS Life Settlements 2 years after that. So we've actually just celebrated 20 years, believe it or not.
That's amazing.
20 years. As of coming up, this year.
Yeah, okay.
This year will
20th
be 20
anniversary
years.
this year.
Yeah, 2006 to this is 20 years.
All right, we got to celebrate. We got to have a party or something.
Yeah,
like
seriously. I mean, it's a long time. It's been a journey. So I started way early on. Started on the buying side, so where the funders and the providers were buying the life insurance policies.
Okay.
And then I decided, you know what? I'd like to flip to the seller side, represent sellers, help them get the best offers for their policies, and focus on that side. And I've done it since, and seen the industry evolve. And now it's fully regulated in 43 states, and you could technically do life settlements in all 50 states.
That's amazing. So before you and I met, I don't think I even knew about this. My dad actually was a life insurance salesman, and I knew about life insurance policies and people who could buy them. I knew that people would let them lapse or surrender them, but I didn't know you could actually sell it. There was actually value in that. So tell me how it works.
Yeah, exactly. Well, I mean, to your first point, so many people don't know. And you're a well-educated professional. I talk to advisors all the time, and I'm the first person they usually hear from that you can do this.
Wow.
So it's not uncommon. So the awareness and education is key to keep getting the word out.
Yeah.
But yeah, in essence, again, it's thinking about a life insurance policy as an asset. And what you want to do is if typically it's people, we say 65 plus with a policy of about $100,000 in face value or death benefit or greater.
Okay.
That's the general parameters that qualify. It's not set in stone. There are exceptions to the rule. So bottom line is, if a family member has a life insurance policy and you are, the probably most common reason people consider selling it is they're just tired of paying premiums, or they got some notice from the life insurance company that, oh my gosh, I've been paying $10,000 a year for my $1 million policy, and now they want $40,000.
Oh, yeah.
What happened?
Yeah.
So that's a very common reason, but it could be for multiple reasons. But the important thing is just to think about a life settlement as one more option. Don't just let it lapse. Don't just take minimal cash value, which without exploring the possibility if you can sell it.
Yeah.
So it's make sure to keep that top of mind, that it's just one more option.
Yeah.
It doesn't always work.
Right.
There's a qualification process. There's underwriting. There's health underwriting. There's, has to be the right type of life insurance policy. But they all can typically work. But, every situation's unique. So it's important to have it evaluated to see if it is a possibility, and then make a decision.
Right. And I'm guessing this is something insurance companies aren't necessarily going to offer up and say, did you know, Mr. and Mrs. Client, you can sell your policy?
No, they don't necessarily make you aware of that. That's not one thing they're going to do. They're just going to send you a notice about, hey, your policy is going to lapse. You either pay this or you're going to be in trouble, or, but they're not going to, do a campaign for you and let you know, hey, this is another option.
Right.
So it's important to talk to your advisor, and keep in mind, we work with advisors all the time. So we're usually the expert company to come in and help the advisors determine, can a life settlement make sense? Does the policy have value? And then take the next steps. But, make sure it's really important for seniors and their family members to just know this as an option, and then ask your advisor about it. Ask them about it. Ask if this is something they should consider.
Right. I can imagine, seniors who may get this notice, maybe they're living on limited income, maybe their Social Security isn't covering as much as they thought. It can be an emotional situation when we're talking about money.
Yes.
And the potential of having to pay more in premiums. What are they getting for this policy after all? Maybe they don't need it anymore. This can be a lifesaver for them. And I've seen commercials now, because now your awareness, right? You want to buy a white car, now every car out there is white.
Right.
Now I'm starting to see more of these commercials from some of these companies. Tell us about that and kind of how you're maybe a little different than what they're doing.
Sure, yeah. So the commercials are from some companies in our industry. They're big. They're pretty much all from buyers, and the technical licensing for the buyers is called a life settlement provider.
Okay.
And they are licensed from state by state by the departments of insurances. So they're doing a good job creating some awareness and creating awareness and educating the public about the possibility of a life settlement. But what people don't realize is, again, they're buyers, and what is any buyer's ultimate motivation? To get something for as cheap as possible.
Sure.
It's just what they do. That's how they make their return. They're not doing anything wrong. It's just that if you're selling a house in your industry, right?
Right.
And someone buyer, he's coming in low, or if you're if he's the, would you ever just go to one buyer?
Right. No.
You'd go to multiple. So same thing with us. So what we do is we're on the other side of the equation. We're licensed brokers in California and multiple other states, and what we do is represent the seller and their family and help them get the best offer for the policy. So we work with those companies on TV that you see. We work with them and multiple others, 30 plus others across the country, to push the market, know which buyers to go to with which policies, and work to get the best offer. Just kind of like a listing agent in your industry in real estate. I mean, we're listing the policy, pushing for the best offer, create a competitive auction type atmosphere, and get the best offer. And the difference can be substantial. The difference can be substantial. I mean, recently, for instance, I'll share a story.
And this is real quick. You're teasing, which is great. We're going to have a segment in our podcast called "The Story That Stuck." It's the story that stuck with our professionals that really made a difference in someone's life. Go for it.
Because it's to the point of where the offer started to where it ended up as well. So it made me think of that when you were just talking about that. So this family had a $2.5 million policy, and it was on the mom and dad, the husband and wife. The husband was in his early 90s. The wife was in her late 80s. The premiums started getting steep. They were steep, around $100,000 a year, and cash value was around $200,000 in the policy. So if they surrendered the policy and took it right now, they would have received $200,000.
Okay. So
we took it, evaluated it, and the offers for the policy, when we first looked at possibly selling it for them, they started off right around $500,000.
So already they're way ahead.
They're way ahead of the cash value already, right? But if you just went to one buyer and you said $500,000 better than 200, let's pull the trigger, they would have just said, okay, let's do it. Sounds good, right? It's not bad,
Right.
Well, the final offer ended up being $1.4 million.
What?
$1.4 million for the policy, right? So, I mean, the disparity of where it's going to start if you just deal with one buyer versus where it's going to end up can be huge, right?
That is massive.
So it's only possible really in our market for the most part by creating competition,
right?
And pushing that value, because it's not like real estate where your clients, they have Zillow, they have all these things they can go online and look and say, oh, this house sold for $1 million, my house is probably worth $1 million too.
Right.
It's not like that. You know, people don't know what their life insurance policies are worth. So it takes some significant evaluation and understanding and making the right choices in the process to increase that value.
Yeah.
And for instance, I remember specifically in that case, there's some underwriters nowadays that will buy policies without medical underwriting, and this policy qualified for non-medical underwriting offers.
Okay.
However, when we looked closer, we took the step to say, you know what, looking at the metals, it's worth it to go full underwriting here. Let's go full underwriting. That added a loan, because we pushed the offer up to around the $900,000 level.
Okay.
That underwriting pushed the offer up to the $1.4 million level.
And if they just called the number that's on screen,
called the number, I
right.
mean, honestly, you just don't know. You
right.
just don't know, and you're just not. You need to deal with somebody that represents you,
right?
That's pushing the value and understands.
For
and
sure.
That's what we offer there. And the benefit for this family was that they they really needed help with some assisted living costs.
Yeah.
Most people are living longer, and we're grateful that we have so many different medicines and so many ways to still try to keep quality of life, but the costs are significant.
People are going to run out of money.
Care. So this was a huge benefit for them to be able to help, make those ends meet.
Yeah.
Yeah.
Well, and that's a big thing that I work with my clients when they're evaluating those three different paths is how are you going to afford to pay for this?
Right.
Like in the TV show Senior Spaces, you met with Rick and Mary, mm-hmm. and you were able to show them how they could afford to do the home modifications if they wanted to do that, or move to senior living by selling their insurance policy. People don't know that's a financial option.
And again, one more thing to think about, right? One more thing to put on the table. I mean, maybe it's reverse mortgage, or maybe it's a life settlement, or maybe it's there's a million other things, but it's just one more thing to consider.
Right. That's pretty powerful stuff. So there was another story that you shared with me that I wanted to explore, which is kind of fun. I wanted to end with this story. It's pretty cool.
Yeah. This one was actually fun and just memorable because of the situation. Kind of touching. They were a couple in their 70s, and this policy, they each had they had separate policies. Total between them, they had about $1.5 million in death benefit. Okay. And they both had some relatively significant health issues. And one of their lifetime goals was to take just a all-in trip to Africa, do the safari, and do everything. That was their lifetime goal. And they actually had no children, these people. So they had no children to leave the policies to. So they said, you know what? No matter what, our health is not great. Let's do it while we can. And they sold their policies. It had nominal cash value in it too. I think between them like $50,000 to $100,000, and they received $400,000 for their policy.
Wow!
Received $400,000 for their policies, and they went on their trip. So
that's cool.
Yeah, it was really cool.
It's great for people who need the money. Mm-hmm. They need it for their care, need it for home modifications.
Yes.
Or if they just want to be able to go on a trip of their dreams.
Just a trip of their dreams, whatever. Yeah, I mean, there's a million reasons to look at it as a one more option. But yeah,
that's very cool.
It's just one more can be a great option.
I can tell that you really enjoy what you do, and you can see what a difference what you do is in people's lives.
Yeah, sometimes you're just in the depth of it all, and you can't see beyond it. But when you got moments like that where you got like, oh man, we really helped them out, or they're just super grateful, or they're getting a large sum of money to help them, make ends meet or whatever it might be. Yeah, that is the awesome thing that makes it special.
Yeah, for sure. Well, I really appreciate you coming here and telling us about this. And there's more information you can learn from Phil. We're happy to give you his information. And we're grateful that you are tuning in to this podcast. We're excited about what more we can do with it. I invite you to subscribe to it. So it's on YouTube, it's on Spotify, lots of different ways you can find this podcast. But we're going to keep doing more and more episodes of this as we keep getting the information out, the resources that people need to know about as they're considering how they're going to live that next best chapter of their lives. This is Bryan Devore. Thanks for tuning in.